moving on. Let's jump back in. What do you think about TLT for long-term bonds, or the TLT ETF for long-term bonds? I don't know much about it, but a bond ETF is typically going to be very low risk. Um, it tends to be more stable than owning stock. Right now, I think the 10-year yield has spiked because of the expectation of inflation as a result for increases in the price of oil. As a result of that, you're seeing bond prices drop. So that TLT probably went down today. I'm willing to bet if it's a long-term bond ETF. Let's see, yeah, it tracks treasury bonds with 20 plus year maturities, which means it's very sensitive to interest rates. But it is backed by the US government, so you won't lose your money with this. You're not going to make a ton, but you won't lose a lot of money, and you can make a nice steady bond return. But if inflation goes up, a lot of long bonds get hit hard. So if I look up TLT, let me see if I can search for it here. TLT. I bet it's down. Let's see what it looks like right now. TLT is, yeah, it's down today. Okay, yeah, it's down a little bit. Let me see. Yeah, not much though, not much. Let me show you what TLT looks like. Do, 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 do. So you see TLT is down today. Oh, is it down for the week? For the month, though, it's up slightly. Let's see what it's done for the last 6 months. See, you see, it doesn't move much, like 2.3%, 2% per year. Over the course of all these years, it's actually gone down. But you got the dividend payments and stuff like that. They come from the interest on the bonds that it owns, so it's not as bad as it looks, but it's not something that's going to make you rich. But it will typically remain somewhat stable because bond funds tend to have lower risk on average than stock funds. Dr. Boyce, what are your thoughts on Merck, a new cancer drug? Ah, okay. I didn't hear about that, but that's good. I think we should be curing cancer. Maybe this AI thing will help us. Um, I wish they could I hear that if you live past the year 2032, they said that's going to be they believe that's going to be the what they call it, the point of inflection for aging, where they said anybody who lives past 2032 will probably get to live another 100 years. I don't know. We'll see. We'll see what this AI thing does if it doesn't kill us first. All right. So anyway, and by the way, another scary thought was they said that the AI, when they did war game simulations, the AI launched nuclear missiles like 85% of the time. They never surrendered. They would just launch a nuke and kill everybody. So yeah, so good luck with that AI thing. All right, so here it looks like they've got a drug called KEYTRUDA that's showing meaningful clinical success, improved survival in tough ovarian cancer regimens. That's good. Okay, so let's see. They're actively building a diverse pipeline of drugs, um, include drugs for HIV, things like that. Um, yeah, so it's a financially solid company with a good portfolio. Some models suggest that if the pipeline growth is realized and margins improve, Merck could deliver good returns. Okay, that's good. The bear case of it, every stock has a bull case and a bear case. That's all the things that can go right, all the things that can go wrong, the risk factors. So it's almost like in business. I don't know if you ever went through this. If you went through a business management class, there was probably a point where they taught you about SWOT analysis. You remember SWOT analysis? In every business, it should go through that. SWOT stands for strengths, weaknesses, opportunities, and threats. Where are you strong? Where are you weak? Where are your opportunities? What are your threats? And every stock has a SWOT. It has things it's good at, things it's bad at, opportunities, and threats. So here, in this case, it looks like with Merck, you've got a KEYTRUDA patent cliff. The biggest risk is KEYTRUDA's loss of exclusivity around 2028. Okay, so it looks like this drug is going to lose exclusivity in 2028. So that's going to kill their revenue because a lot of, they call them biosimilars that are going to enter the market, I guess, generic drugs. They have revenue concentration risk.